And here we go, getting very close to the release, and it's hitting the wires now. On the producer price index, this is November. I don't have October, so the comps get a little weird. Up 0.2 as expected. Strip out the all-important food and energy. Good news. Unchanged. That's definitely much cooler than we were expecting. And without the October read, what I would say is that unchanged would be the smallest going back to August when it was down 0.1%. Let's strip out food and energy and trade, and it's up 0.2 as expected. Now, here we go on the year-over-year numbers, in my opinion, the most important. Year-over-year final demand, 3%. Hot. 3%'s hot. I don't know what October was, but that would be the hottest since July when it was 3.2%. If you strip out food, energy, and food and energy on the core, it's also 3%, much warmer than the 2.7. Strip out food, energy, and trade. The one I wanted to be more under 3%, exactly the opposite. It gooses up to 3.5%. That would equal March, and to find a higher number, you're going back to Feb when it was 3.6. Asterisk, I don't have October, so I have 1 month missing when I'm doing the comps. That's the Moneyball number in terms of the negative aspects of this report. Retail sales for November, a powerful up 0.6 on the headline. That would equal July to find a stronger number. You're in June of last year when you're up 1%. Strip out autos, it still remains rather strong, up 0.5%, stronger than we were anticipating, much stronger than the revised up 0.2 in the rearview mirror. Strip out autos and gas, and it's still hot, up 0.4, better than expected, equals the slight downward revision to last month from 0.5% to up 0.4, and the core retail sales number up 0.4. That's also strong. Now, it's as expected, and it's definitely weaker than the 0.6 in the rearview mirror. But this series has been running pretty strong of late, so we want to pay attention to that. Now, I'm not quite done yet. The cousin to the trade balance, the current account balance, expected to be a minus sign of $238 billion, comes in roughly in that area, minus $226 billion. Last month ends up slightly under $250 billion at $249 billion, all minus signs. Now, what is the absolute record in this series? It was the first quarter, March, the quarter ending in March. It was minus 439,000, Joe. This metric goes back to 1960, and of course, that was the biggest ever. So even though minus 226 doesn't sound good, it's significantly less than minus 439,000. Now, after all of that, where are we? Well, we're hovering right now at 416 on a 10-year. Where were we before that litany of numbers? 416. So we did see some volatility, but not a lot of attention was paid to those much warmer PPI wholesale year-over-year numbers. I'm a little surprised, and just because it's not affecting the market right now doesn't mean it's not going to affect it as time goes on. I would definitely look for these numbers to once again push that 10-year to test that 4.20%. We haven't closed above it in over 4.5 months. It really has been a tight range in long-dated treasuries. Joe, back to you.
You know, I hope I didn't have my heart set on more rate cuts. Rick, I don't know how weak the labor market would have to appear to get any this year with numbers like, if it were to continue, the numbers that you just gave. There's just no way.
I couldn't agree more. And you know what? In many ways, this may be at the epicenter of everything going on with the Fed chairman. Listen, I'm not going to weigh in too deeply. I have no idea who's innocent, who's not innocent, who did what, who brought it. All I can tell you is that if I was chairman of the Federal Reserve, I'm not sure I would have played 2025 much differently than the current chairman. And as far as your comments right now, I couldn't agree more. With these numbers on the warm side year over year, you got to kind of run in place for a while until you get better data on the labor market, which looks like it's re-upping to many anecdotal facts.
Yeah. What did this time, Rick? I mean, if you had to point at something and say, aha, for why it was hotter than you thought for sure, what is it?
Yeah, you know what, Joe? I don't know that I could even make a guess on this on the wholesale side. I'm sure that somehow they're going to connect the political dots to issues that may be due to tariffs or whatever.
Yeah.
But in my opinion, I really do question some of the accuracy of some of these numbers. But boy, that's well outside the realm of expectation. So most likely there is some smoke where there is fire.